Hey guys, Mike here. So obviously Jerome Powell spoke at Jackson Hole on Friday. You kind of saw how the market reacted, but more importantly, we're going to talk about how the bond market reacted because they tend to be a lot more accurate than the stock market and what they see as far as rate hikes, because it was actually pretty surprising. And then something else I'm going to talk about is liquidity on a global scale. This chart might actually surprise you and explain a few things. And also something you need to be aware of that's showing up on a lot of the major charts here, and we need to pay attention, see if it plays out, because it does have a decent win percentage and stuff. So let's make sure we pay attention to that. Now, when it comes to Jackson Hole and how it affected what they think is going to happen in the future as far as rate hikes, and you can see come September, they think there's an 81% chance of a pause now. Only 20% chance of actually getting a raise, but then when you skip to November, because there is no October meeting, all of a sudden, 43% pause, about a 48% chance they actually raise again, and then even a 9% chance they do a 50 basis point hike, which, I mean, that would be stunning, and we have to get some crazy data coming out. But understand, basically, all he said was, we got more work to do. The economy is still strong right now. He's even seeing a bounce back in the real estate market, and maybe they see prices going back up or something. Definitely see a problem with inflation, maybe starting to kind of spike back up. And so they still got work to do. It's nothing new. I mean, he didn't come out here and reinvent the wheel. It's nothing new at all, okay? And so just keep that in mind and stuff. I don't think anybody should be surprised by that. I was surprised the fact they thought they were going to pause in September and then raise again in November. And maybe that's what they're going to do, like skip every other meeting like somebody talked about. And so that could be the case. Now, when you're talking about the real estate market, right, what do you see in here? Of course, if you didn't see my Warren Buffett video, I'll put it at the end and talk about why he made his big investment. But you can see right here on this chart, U.S. new family houses sold annual total. And obviously it's going up because nobody in existing homes are actually moving out. And then you got U.S. new houses monthly supply is doing what? Well, it's going down again. And so it just keeps heading down because the supply, again, I'll put that video at the end, you see, is just at a level we just really hadn't seen before. And especially when it comes to the new home sales now making up at least 1/3 of all sales, because nobody wants to pay the prices or leave their 3 to 4% rate and go sign up for between a 6.5% to 7.5% rate. And you can see right here active listings. I mean, look at that. Since, what does this go back? 2012, you see it's been going down. But come 2022, it's just falling off a cliff. And here's the kind of stuff you're going to see coming out even more. Zillow Home Loans offers a 1% down payment option, opening home ownership to more borrowers. That does not surprise me. And if you plan on moving to Florida, I'm just going to give you a warning here. So you are not shocked. When you move here, your homeowner insurance will probably be 2 to 3 times what you're used to, because here in Florida, it's crazy. And you may get in on the ground floor, but let me tell you, it has increased in 2019 on average around $2,000 to $6,000. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And that is not an exaggeration, because I got my letter last year and it was a 50% bump up. And it just has to do with a whole lot of stuff that's going on pertaining to Florida in general. But I'm just giving you that warning now. You will see insurance rates like you've probably never seen before. So just keep that in mind. Or the next year when you go to renew, you're going to say, oh my goodness, yeah, it's a hot mess. Now, something you keep a close eye on, and this is what I keep a close eye on, is liquidity. Liquidity is the #1 driver of markets. And you can see on the global scale, I've been paying a lot more attention to this now, and this is the G3 Central Bank balance sheets versus the NASDAQ 100. And you can see, usually they kind of go hand in hand, but now there's this huge divergence between both of them, right? Where global liquidity makes sense, has been going down, but the NASDAQ 100 is like, we don't need it. And again, I find liquidity so important that I literally created a channel for it. So, as far as the U.S., our liquidity just kind of stays steady. We took a drop down in May, but then it just stays sideways. Again, everybody thought, oh my Lord, when they issue all these treasuries, liquidity is going to get drained. And it just moved from the repo account over into the general account and stuff, which is two of the 3 things that actually make up this equation and this chart right here. So, it'll be interesting to see how much that global liquidity has an effect on the NASDAQ 100. As you can see, it usually does go hand in hand, so I'll keep an eye on it for you. Now, the other thing is what's going on with these charts here. And you can see on the major indexes, what do you got? This trend line coming up, breaks through it, rejects, right? What else is going on? Head and shoulders, right? On the S&P 500 right here, as you can see. Again, if that plays out, 41, 4,200, somewhere in there. But look at the NASDAQ as well. same thing. You got this trend line comes up, rejects, and then you got the head and shoulders forming, okay? And you're going to see this not just on these two major indexes, but if we look over here, we can also see that it's happening on a lot of different sector charts as well. And you can see this one right here, there's a head and shoulders. It hadn't quite reached the trend line, but it's heading down towards that trend line for its be the third or fourth bounce right there. So that's something to keep in mind, because remember, industrials have wore on a tear until this recent sell-off. Then you got consumer discretionary, same thing, like the right shoulder trying to form, and you can see it's sitting right there on that trend line. So if that breaks, you know, we got to keep an eye on it. And you got technology here, already broke through, rejected on its second time now, and the more it hits and gets rejected, the harder it is to break above this. It becomes much more resistant to that. Same thing as when you're building out support, the more it bounces off of it, the more support you get, right? Then you got the U.S. Home Construction ETF, same thing, come down. It actually bounced off its trend line to show some strength. So we'll see if it breaks through or not. I don't consider it to be a head and shoulders when I look at it. And then lastly, you got communications, right? This is the same thing. It breaks through that trend line, moves up, gets rejected. I don't see a head and shoulders on this one yet. But the other ones do, and we just got to see if it actually plays out, guys. Okay, let me know what you think in the comments on that. Now, Tesla, and it's simple as far as Tesla is concerned. If it breaks that trend line around 247, 248, we're going to 260 probably really quick. That would line up with a good support level, this volume profile node right there, and the 50-day moving average. So just keep that in mind. Plus, you got the positive, or the bullish MACD cross on the daily. So we'll see. Again, I mean, if the market just tanks for whatever reason, then that's a different story. But with this one, once it catches that momentum, and I think that trend line is going to be where you're really going to see it fire up, it can go 260 relatively quickly. We just got to wait and see if it can break that trend line or not. And when you go to the daily, that's what I'm talking about. That trend line means something because it rejected twice on Wednesday, as you can see. And then when you look at AMD, you can see that line right there is the year-to-date anchored VWAP, which has bounced off of multiple times. It's sitting at it right now. It's at the bottom of that volume gap to the right, as you can see, somewhat coming into support around 97, 98-ish, somewhere in there. And so, you know, this one could probably move it to 102, 103. It's definitely going to hit resistance at that point in time now that it's broke through to the downside and stuff. So there still is selling pressure, but this one's going to go with NVIDIA. If NVIDIA continues to try to sell off, AMD and all the semis are going right down with it. If it finally gets its bounce, then it tends to lift all boats. But you can see right here when we go out to the weekly, you can see that gap is in right there. And once it gets down below that, I mean, 90, 91, 92, definitely really good support there. So just keep those levels in mind. We'll see if we can get a bounce this week and go back up through that volume gap to around 106, 107. Now, PayPal is another one that still held that trend line. But I want you to look at this. These look identical in the last three bounces here. You got this one right here with the RSIs oversold, bullish MACD cross coming up. That wouldn't even at the bottom of that trend line, by the way. Then this one, same thing. You got RSI oversold, bullish MACD cross. It is at the bottom of that trend line. And you get a pretty decent bounce, right? And you can look to the right, and you can see bullish MACD cross, RSI is oversold. Again, bouncing off that trend line. You know, we'll see if this one finally is able to catch a bit up. But I mean, if it did, even if it gets back to that trend line, that's like going to be somewhere around an 18% move. So that's a pretty solid move. I will say it's not like seasonality is in its favor, really. I mean, because seasonality, you can see for September is bad. It basically just trades sideways on the seasonality chart, September to December. You can see from like March up to July, though, is like a great time. So keep that in mind. Just study the charts and stuff. But you can see when we add the volume profile, again, it's going to be some resistance, 64, 65. But you can see if it can get like 66 somewhere in there, man, that volume gap right there, like it'll shoot up to the 70s. I mean, it just has to get there. But again, it's PayPal, and there's a whole lot of like political stuff going on with that one and everything else. People got upset about what they did with, you know, banning people from speaking bad on social media or something like that. I don't really follow that kind of stuff. But BABA now is another one of those ones where it's held that trend line. And I told you guys, I said those golden crosses where the 50 crosses 200, it means a lot for a lot of the stocks. It doesn't mean it for BABA. I mean, it has dropped, what, 13% since that golden cross. It just doesn't mean anything for BABA, okay? And this is one of those ones as well. It's going to go with the Chinese news. They did have some good news come out where they're going to basically cut the tax on trading or investing in stocks by 50%. So we'll see if that actually does anything to help these come Monday. But you can see on the weekly, I mean, because of the way this thing has moved throughout the years, I mean, you get above 98 98 to 100 especially, and boy, this thing is going to take off because there just isn't any resistance, right? So if it gets momentum behind it over 100, I mean, wow, you can see that, right? I mean, look to the left. No resistance support coming down, no resistance support really. And so that's what people are hoping for. That's what they're crossing their fingers for, okay? Now, Meta is one a lot of people got on the radar here because this one absolutely could fall. If big money wants to push us down, it wouldn't even be in a problem at all because of the way it rose up. That's the first time it's hit its 50 this year, which I've told you guys for months now that was important. It came up to the 50, it rejected off the 50 again. And then when you look out to the weekly, you can see right there on 266, you got support. But then if it breaks that, you're going all the way down to like 235. And so again, that would actually put it down through the 100 as well. So if they want to push this one down, this is a prime candidate. You can see the MACD down there on the weekly. Bearish cross, obviously any other time that's happened. You can see you get at least a somewhat of a decent dip. And then when it comes to earnings, it's going to be a lot of high beta stuff here and then a lot more retailers. I mean, you see Monday, I don't really see anything on there, but Tuesdays when you're going to have Neo, Best Buy, Big Lots. And then we go over to Wednesday. You're going to sit there in the afternoon, after hours. You're going to have CrowdStrike, Okta, Salesforce, Chewy, Five and Below is another retailer. Then you go over to Thursday. You're going to have a Dollar General. Academy Sports is right there. Campbell Soup, I like to hear them because they're always talking about how they can pass on cost to us. I want to see if they're still able to do that or not. Then you'll have Broadcom, Lululemon, Mongo, Sentinel, which is another semiconductor, Dell, VMware. And then we are loaded for economic data this week. It's going to be Dallas Fed manufacturing data on Monday. Tuesday, you're looking at a whole bunch of housing stuff, especially the Schiller home prices. People like to listen to that. JOLTS job openings, JOLTS job quits, Dallas Fed Services Index, Dallas Fed Services revenues. People will listen to that. I don't know if it'll move the markets or not. Again, a whole lot about mortgages, things like that. ADP employment change on the 30th there. Core PCE, GDP data all over the place. And so that's going to be a really big day right there. And that's basically all before the opening bell. And so keep that in mind. Then we go to the 31st. You're going to have job quits, jobless claims, core PCE. Again, you can see the numbers of what they're expecting. Initial jobless claims. Then you're going to PCE price index month over month, year over year. Personal income month over month. And you can see the numbers to the right here, right? Notice how they're not moving a lot anymore. Personal spending month over month. Chicago PMI, which people like to listen to. And then Friday, we'll have the unemployment rate, which they don't expect a single movement on that, still 3.5. Average hourly earnings month over month, year over year. So a huge data drop this week. And they always say, watch out when bad news actually becomes bad news. That's when you want to pay real attention because what's been happening since October. Didn't really matter how bad the news was. The market just kept ignoring it. So as you see news come in, if the unemployment rate starts to spike up, if average hourly earnings, maybe they're coming down or something, people are making less, and the manufacturing data just keeps looking bad, see if the market actually does start going down on that news, okay? Because when that happens, that's when your ears need to perk up and everything. You need to sit up and say, "Whoa, what's going on now?" All right, because that's usually not a good sign if you're a bull. It's a great sign if you're a bear. So just keep that in mind and stuff. But again, we'll have to see if these head and shoulders play out. They don't always have to do that at all, but they're just appearing on so many charts now, and so many of these major sectors and these charts have come back up on those trend lines they respected for months and gotten rejected maybe once, maybe even twice. And so when that happens, it doesn't mean we're going straight down. It doesn't mean some stocks won't go up. So pay attention to stocks this week. If we hit weakness, pay attention to the stocks that stay green and keep going up. Again, we're coming into month end. And so, what do fund managers usually like to see? They like to usually kind of end on a positive note, especially if it was the end of a quarter, which is not. That'll be next month. They usually definitely like to get those bonuses and stuff in and end on a positive note. So anyway, we'll have to see how it goes. Let me know in the comments what you think is going to happen this week and stuff. Hope you got something out of it. Hit that like and subscribe button if you did. Appreciate you guys sharing the videos. Appreciate all your feedback and love reading the comments and stuff. I learned as much from you as hopefully you actually get out of this channel, I hope. So anyway, I'll see you tomorrow for another busy day, guys. Thanks.